Good day, everyone, and welcome back to the MCF Participant Education Series. My name is Hunter Nighbert, and I'm a financial advisor and retirement planning specialist with MCF Advisors. Over the course of the last couple of years, we have covered several topics, such as savings and retirement readiness, market volatility, and estate planning, to name a few. All of these subjects are often derivatives of planning in some sort of fashion. So with this in mind, we're going to take a little closer look on the basics of financial planning, what information some of this entails, and some steps that you can take to get started developing a plan of your own. First, what is a financial plan and why is that important? Financial planning is a step-by-step approach to meet one's financial goals. A financial plan acts as a map as you go through life's journey. Essentially, it helps you be in control of your income and expenses and investments, paving the way to achieve your goals or identifying limitations or barriers as well. If you fly a plane or captain a boat in the ocean, you usually would use navigation to get where you're going. On the journey, the captain would also want to know what the weather forecast is going to be along your route to get to the destination smoothly and safely. The same principle applies to financial planning. It helps you see the best path and what routes not to take before they happen. A sound financial plan can help answer questions like these. When can I retire and how much can I comfortably spend? What risk and asset allocation strategy is appropriate for me? Will my portfolio hold up under stress and declines in the long run? Will my savings last through my life expectancy and beyond under my current distribution plan? Will my family be secure in the event of my death, premature or otherwise? Can I be more efficient on limiting my income tax obligations or overall tax exposure? Will my assets and wealth transfer to my family as I intend them to? A good plan arms you with information to be able to answer these questions and more. Let's look at some of the main components of what's in a financial plan. Depending on who you ask, there are 5 to 7 different pillars of financial planning. Individually, these pillars are very important pieces, and when analyzed, each provide an important foundation in support of your overall goals. Let's take a look at these a little bit closer. Cash flow is an integral part of financial planning. Identifying your income and expenses is of vital importance to determine what your net cash flow is and how much you can potentially save. If you often spend most of your income, you will consistently miss your savings targets. Retirement planning starts with some basic questions like, when do you plan to retire and how much do you plan to spend and for how long? The answers to these questions are directly related to how much your savings goal and target should be, as well as possibly what your risk strategy should be during your working years in retirement. Investment risk assessment decisions are made based on your horizon timelines, risk appetite, and your overall goals. The extent of your risk and diversification in your portfolio will be a major factor in the income that your investments will eventually generate and the liquidity that you'll have later in life. Insurance and protection is an important component that nearly everyone needs to consider. Insurance covers the risk, and determining the extent of coverage you need to insulate yourself and loved ones from unforeseen circumstances. Health, life, and disability, along with property and casualty insurance, should all be covered. Tax planning is often mentioned in our industry, but it often falls short in execution because of a lack of communication between advisors and CPAs. Investment decisions are often made with tax implications in mind. But what if you could create strategies in which investment decisions today can save you tax tomorrow or for the next generation? Income sources and asset sales and purchases should all be considered from the point of tax mitigation whenever possible. Tax avoidance is legal, tax evasion is not. Estate planning is the process that sorts out the legalities of your assets you intend to transfer upon death. It also provides documents that give a trusted person decision-making abilities on your behalf should you be incapacitated. A properly designed estate plan that addresses all of your assets and offers peace of mind that your wishes for your estate be carried out as you instructed. It can also pass on potential savings to your next generation as it relates to asset and wealth transfer in terms of taxes and/or potential probate costs and legal expenses. So where do you start? First, start by defining your goals. It's really important to keep them realistic and in perspective. Identify both short-term and long-term goals for yourself. For example, should you pay off debts or increase your savings goals for retirement? What age would you really like to retire is a consideration. What would you like your retirement lifestyle to look like? If this can be accomplished, what are your secondary goals? Leave assets to your kids or family? From here, you have to make a budget. It's a critical step and you should not skip it. Track your expenses versus your income, and then you can prioritize your spending. Create an emergency fund first if you don't have it. 6 months of income saved is what we would recommend. Then be strategic in managing your extra cash flow. Reduce your debt or save more towards your goals, or both. Once your spending plan is in place and you have your excess cash flow figured out, you now have a path for further saving, and you could work on upping your savings goal if need be. Savings rate is the #1 factor of how much money you'll have in retirement. Make it a goal to save as much as your plan will allow, or more each year would be a wise decision if you're not at your goals. Save outside the plan when possible. Monitor your Social Security as part of your retirement income plan in retirement as well. Lastly, play defense. Do you have a need for life insurance? The two basic functions of life insurance are to help create an estate or help pay for one. Which policy makes the most sense for you? Term insurance, or do you have adequate surplus and cash flow for a permanent policy? It's also wise to look at a long-term care policy or a rider to cover the extraordinary expense of skilled care just in case. Lastly, have you met with an estate attorney, or perhaps used a service like trustandwill.com or other online estate planning solution services? Estate planning is often put off, and none of us like to think about our own mortality. For those of you that have had to deal with the probate process for a loved one, having an estate plan cannot be overstated in terms of importance and really just peace of mind. In closing, we're here to help you reach your goals. Starting the process doesn't have to be overwhelming. Start with your goals, track your income and expenses, and go from there. I'd encourage all of you to take this critical step of implementing a financial plan to help you bring clarity to your situation and create a path to meet your objectives. If you found the information in this video useful, I would encourage you to share it with family and friends. Until next time, have a great day, and we'll see you soon.